All right, folks, we're going to look at the Federal Reserve policy. The Wall Street Journal called the Fed, let me see, the Fed is driving in a fog. Can you imagine that? The Wall Street Journal editorial page, Fed is driving in a fog. So lucky me, joining us right now is Federal Reserve Governor Christopher Waller. Chris Waller, thanks for coming back on set.
Hi, Larry. Thanks for having me.
Why are you driving in a fog?
No, I don't. I wish we'd stop using that phrase because we actually have a lot of data. Just because the government official data hasn't come out, we have a lot of data. And what is that data telling us that we know right now? We know that the labor market's been weak. We're not hearing any reports. Private sector saying it isn't. We have inflation data. It's pretty clear tariffs are having a minor effect on inflation. It's up, but it's pretty clear. We also believe it's going to be a level effect. It's not going to be persistent inflation. Inflation expectations are anchored, and in that world, the standard central bank wisdom is to look through it and proceed with worrying about the labor market. So, in my view, we should just look at what the data is telling us and proceed on policy that way.
What do you say to people, people on the left and the right, but it could be anybody? You're running, the CPI is running about, it's actually 3% through September. Year-to-year change is 3%. Core CPI, same way, 3%. 3-month changes look even worse. 3.6% for the overall CPI, 3.6% at an annual rate for the core CPI, excluding food and energy. Grocery prices over the past year, up 3.2%. People worry a lot about grocery prices. It shows up in all the polls. A lot of my polling friends, the good ones, are saying inflation is still the #1 issue. It is a hangover from the Biden years. This is not 2021, 2022, but it's still there. So 3% inflation, your target is 2%, but you're easing policy by cutting rates. Some people say that's going to keep the inflation going.
Right, and that was what I've been arguing for over a year, is that we'll see some temporary price effects from tariffs. Right now, we're estimating maybe 5/10.
But maybe it's not tariffs. Maybe it's not tariffs. It could be tariffs, I agree, but that's very ambiguous.
But that's the point of looking through this inflation. If that's what you think it is, you look through it. You don't base policy on it. So it's not that complicated.
What if you wake up and then it's the end of the year, it's Christmas time, it's New Year's, and prices are still very high? What do? I mean, I get the tariff thing. I agree with you completely. Look through it. It's a very small percentage of the economy. Larry Lindsay, distinguished economist, 10 or 11% of the economy. That's all it is. So you're right. You have to look through it. But on the other hand, this other stuff seems very sticky to me. And that worries me. I mean, I don't know the right answers. You've got supply side policies, right? You've got good investment, good incentives for production, which would counter inflationary. I think you would agree with that. And yet, we're still running 3%. Your target is 2%.
Yep. So that's what I'm saying. If you take off what we estimate is potentially whatever temporary tariff effects, inflation in the PCE, which is what we look at, is running about 2.5%. So yeah, it's not at 2%, but it's not that much higher. And we expect it to be coming down. All of our forecasts have inflation coming back down to target. So yes, it's high, and it's been high, but it's fully coming back. And the biggest concern we have right now is the labor market. It's not this idea. We know inflation is going to come back down. So this is why I'm still advocating that we cut policy rates in December, because that's what all the data is telling me to do. This fog story has just got to stop. It's just got to stop. The fog might tell you to slow down. It doesn't tell you to pull over to the side of the road. You still have to go. You may be careful, but it doesn't mean to stop. And that's the right thing to do with policies, to continue cutting.
So the Fed forecast is for lower inflation.
Yes.
The last time the Fed forecast was right was when? Exactly, more or less, when?
Well, actually, in the last year or so, it's been pretty good. 2 years.
Really?
Yeah.
Oh, you're sure?
Yeah, we said it was coming down. It came down from 4.5% down to 2.7%.
I mean, I've been doing this a long time. I even started in the Federal Reserve. I don't know if that forecast. So let me ask you this. The Fed is forecasting forever the economy cannot grow better than 1.8%. That's their forecast. Now, I don't know whether that's right or wrong, but I would think with the kind of economic policies we have, one big beautiful bill, tax incentives, depreciation, immediate depreciation, deregulation, and so forth, why can't we get 3% growth or 3+%? Why does the Fed always say stop at 1.8? I mean, that strikes me as mismanagement. Like we need new people at the Fed to get us to 3. Because 1.8, what does that do for me? Nothing.
So there's a difference between the short run and the long run. So the 1.8 is typically, in the long run, productivity growth is what drives your long run growth. That's in the longer run. And that has been averaging about 1.6 to 1.8 for the last 20 years. In the short run, you can have growth over.
Do you think the AI revolution, quantum computing revolution is going to, I mean, most people on Wall Street see faster productivity.
Yeah, I do too. I'm a big optimist on it. I gave a speech a couple weeks ago on AI and what it's going to do. But it's still not quite there. We're not seeing it yet in the productivity. It'll be down the road, and maybe not that far down the road, but it will do it. So everybody's kind of expecting we're going to get this kind of rebound, but it's probably not going to be in the next 6 to 12 months. But 12 months, 24 months, I think you're going to start seeing some big changes.
At the Federal Reserve Board, people often ask me, and I've been out of it for a while, but they say, are there any supply-siders at the Fed? At the Federal Reserve Board staff, are there supply-siders? Do they understand, for example, that with lower taxes and deregulation, and if you have faster economic growth, that is not going to cause inflation? Or does the Fed staff basically tell you guys, the governors, that anything above 1.8% is going to be too rapid and inflation will ensue, and you have to stop the economy from growing?
Yeah, I mean,
how prevalent is that view?
Well, I can tell you for myself, part of the reason I'm a governor is because of you, because I had the same views as you when you picked me or put me up for this job 6 years ago.
Proudly, I might add. Proudly.
Probably.
And you're in the game to be the chair.
So, the staff does take this into account when they estimate potential GDP.
Do they?
Yes, they do. They take it into account for potential. But then the question is, how tight is policy relative to that measure of potential? And that's kind of where most people, we don't talk about potential when we go out and give speeches or whatever. But the staff does build this stuff in. Now, when it comes to deregulation, I'm a big believer in deregulation. Deregulation is like rate cuts. It lowers the cost of capital just like cutting interest rates does. That's the big value of it. But if you're going to say, give me 2,000 or 3,000 regulatory cuts and then tell me how that all adds up into our growth number for the whole economy, it's kind of a tough exercise to do.
3.5% growth.
That's fine.
You got tax cuts, you got immediate depreciation, write-offs for business. President says he's got whatever. He says he's got 15, 20 trillion dollars coming in. Even if a third or a half of that is true, that's a big boost to the economy. We do have deregulation. We do have declining energy. I mean, I think, and what happened to like 3.5% growth with 2% or less inflation? You know, Chris Waller, we've done that in the past.
I know. We were doing fine at the end of the first Trump administration. Growth was picking up. We had inflation below 2%. Fed was raising rates. I was one of the people saying, why are we raising rates? There's no reason to raise rates when inflation's below target. And inflation expectations were anchored. Nobody saw it. Growth was going up, but people felt like because the unemployment rate was low and growth was high, we needed to raise rates. That wasn't my view then, and it's not my view now.
Yes, thankfully. So when the president calls you to become Fed chair, you'll say yes?
If the president asks me, I will serve. He asked me once before, and I said yes. If he asked me again, I'll say yes again.
That was a great meeting, too. That first one was a terrific meeting.
Right.
Anyway, Fed Governor Christopher Waller, you're a truth teller. Well done.